Best stocks to buy in 2023. There are tens of thousands of publicly traded companies in which you can invest, not to mention private companies. It's not strange that many investors don't know where to start with all the exchange-traded funds, ETFs, and mutual funds they can buy. And since the market has been going down recently, especially for growth stocks, there are a lot of stocks that are selling for a lot less than they were just 6 months or a year ago. But before we begin, please like and subscribe to our YouTube channel for such amazing and informative videos. 1. Etsy. Before the COVID-19 pandemic, Etsy was growing nicely by connecting crafty makers with customers looking for something a bit more out of the ordinary than mainstream e-commerce fare. During the pandemic, e-commerce got a huge boost. But Etsy absolutely skyrocketed, growing at more than twice the rate of overall e-commerce. 2. Pinterest. Pinterest is an oasis of positivity in a social media landscape that's grown increasingly depressing and divisive. That partially flows from what Pinterest is about, which is ideas. People go to Pinterest to focus on things, not on other people. Whether it's building a dream deck, baking a kid's birthday cake, or updating your wardrobe, Pinterest gives people visual inspiration for the things they want to get done. 3. Block. Block, formerly known as Square, has evolved from a niche payment processing hardware company to a massive financial ecosystem for merchants and individuals. On the merchant side, Block processed about $188 billion in payment volume over the past 4 quarters, and it also offers a suite of adjacent services for businesses. On the individual side, Block has the Cash App, with 47 million users, as well as capabilities that include person-to-person money transfers, direct deposits and debit cards, the ability to buy and sell stocks and Bitcoin, and much more. 4. Shopify. Shopify operates a platform designed to allow businesses of all sizes to sell their products online, with a particular focus on empowering smaller businesses and growing alongside them by establishing long-term relationships. Shopify offers a subscription plan starting at $29 per month for businesses, and it also offers many adjacent services that help businesses operate smoothly, such as payment processing solutions and logistics. 5. Realty Income. There's a solid case to be made that when it comes to value, growth, and income, it's tough to find a more well-rounded stock for long-term investors than Realty Income. If you aren't familiar, Realty Income is a real estate investment trust, or REIT, and primarily invests in freestanding, single-tenant retail properties. Walgreens, Nasdaq, WBA, Dollar are just a few examples of the top tenants. Realty Income owns more than 11,000 properties in the US and Europe, most of which are rather recession-resistant and less vulnerable to e-commerce disruption than many other retail businesses. 6. Mercado Libre. One of my favorite long-term stock investments in the market, Mercado Libre is often referred to as the Amazon of Latin America, and for good reason. The company operates an e-commerce marketplace that has a dominant presence in some of the most populous nations in the region, including Brazil and Argentina. However, there's a lot more to Mercado Libre. It operates a fast-growing payments platform called Mercado Pago, a logistics service known as Mercado Envios, a business lending platform. 7. Intuitive Surgical. Robot-assisted surgery beats the shaky hands of humans. That general thesis hasn't changed much from when I first noticed Intuitive Surgical stock in 2005. The Da Vinci surgical system is the clear market leader, and the razors and blades model helps it generate a recurring stream of revenue as its systems are used to perform procedures. Intuitive Surgical is dominant in its space, and it has lots of room to grow as its surgical systems increase in adoption and the number of its supported procedures increases over time. This is particularly true in many international markets, where the implementation of robot-assisted surgery could be a long-tailed growth catalyst for this excellent business for decades to come. 8. Diageo plc, DEO. Last up is Diageo, the $100 billion UK-based beverage giant. A consumer defensive stock, Diageo should be able to hold up in a strained macro environment, as alcohol tends to be relatively recession-resistant. As with tobacco, alcohol consumers tend to have a fair degree of brand loyalty, and the company's slate of elite brands gives it enviable positioning in its space, with bar staples such as Johnnie Walker, Guinness. Despite net sales jumping 21.4% in fiscal 2022, the stock fell with the broader market last year, losing 17.4%. That's largely due to its base in the UK and a hat slump can't last forever, and shares now trade for about 20 times forward earnings, a discount to its 5-year average forward PE of 24.4. The defensive Dow has traded more or less flat in 2023, adding 0.3% through March 23. 9. Disney. The House of Mouse is the all-weather tires of a portfolio. The pandemic hurt its theme park and movie businesses but helped the Disney Plus streaming service, which has grown into a powerhouse years earlier than Disney expected. In fact, Disney Plus now has more than 160 million subscribers less than 4 years after launching, while the company's initial 5-year goal called for 60 million to 90 million. In 2023, demand for Disney's theme parks and movies has started off stronger than ever, despite pressures and recession fears. In fact, revenue is far greater than in comparable pre-pandemic times in Disney's parks due to initiatives that have driven higher. While most of this list is made up of growth stocks, or at least stocks that have some exciting growth drivers, this is the relatively boring value pick of the bunch. The Buffett bears will say he has lost his fastball, but Berkshire continues to produce market-beating returns in most years despite its massive size. So, if you're interested in learning more amazing information about finance, make sure to subscribe to our YouTube channel and hit the bell icon to get notified by our new videos. Please like and share the video, don't forget to comment down your views on this. Thanks for watching till the end.